Hey guys, what is going on? Welcome back to the portfolio. Welcome back to the channel. Great to have everyone back on the portfolio. Welcome to 2022. Hopefully you guys had a great New Year's, and hopefully you guys had a great 2021 investing season. As you can see with the portfolio, we definitely did not hit our goal of $800,000. As you can see, $778.96. And over the past few months of trading, as I detailed in my prior few videos, kind of an up and down pattern. Was not able to capitalize on this nice run here up to $860,000. Definitely has been pulling back at the end of the year. But hopefully moving forward here, we can get the portfolio above $800,000 early in 2022. But you can see over the past 1 year of trading, it was successful. 42.95%, 233,765. So again, hopefully we can get this above $800,000 here in the next few months. But let's go ahead and take a look at a couple different stocks here. I definitely want to talk about what the difference between a growth stock and a dividend stock is. There was a few viewers on the channel wondering exactly what the difference was. So I thought I'd take the example of Ford versus Tesla. Ford would be considered a dividend stock. Tesla is definitely a growth stock. And there's a number of ways we can take a look at each of these stocks. So Ford Motor Company, as you guys know, is one of the larger holdings in the portfolio. 28.16% portfolio diversity. You can see market value $326,403. I have 15,700 shares. Average cost $762 for a total return of $176.67, $206,698. So that is definitely not typical of a dividend stock. You typically will not see a huge growth in the price of the stock. Tesla, another one of the largest holdings in the portfolio. Actually, I think it is the largest holding at this point. 36.67%, $425 and $8, 400 shares, average cost $1,022.50. If you guys have watched the prior few videos, you guys will know I'm trying to get out of a call with Tesla, having to roll that forward, which is kind of interesting. You can see total return here, 3.91%, $16,008. So actually that is the opposite of what a growth versus a dividend stock is. But nonetheless, let's take a quick look at a few of the numbers here. So Ford Motor Company has a dividend stock. Tesla does not have a dividend. If we take a look at some of the numbers, so there are a ton of numbers you can take a look at when evaluating a stock's dividend. You can see dividend yield currently is 0.481%. That will change. Ford recently restarted its dividend of 10 cents per share, so 40 cents per year a dividend. So some of these numbers are not quite accurate. If you go on, for example, E-Trade, Fidelity, those are the places I use to take a look at some of the numbers. These are a little bit different. So Ford Motor Company, first thing you want to take a look at is the payout ratio. So the dividend payout ratio is a proportion of a company's earnings that is paid out to the investor in the form of a dividend. Typically, you do not want that to be the entire income for the company. That is not sustainable. Currently, Ford's dividend is 10 cents per share. Every 3 months on a quarterly basis, so that would be 40 cents per share. Unfortunately, with the pandemic, the net income per share has been about 40 cents, so the payout ratio is about 100%, which is too high. Moving forward, the earnings per share will be about $1.90, so that'll drop that dividend payout ratio to about 20%, which is very healthy. Anywhere from 30 to 50% is definitely healthy, meaning that over the longer term, the company will be able to pay that out in a sustainable fashion. If it's paying out every cent that it makes in a dividend, over the longer term, that's not going to be sustainable. So moving forward for 2022, I think this is going to be a very sustainable dividend from Ford Motor Company. If we take a look at Tesla, if we go down to the dividend, Tesla does not have a dividend. So it puts every penny of its earnings back into the company for growth. So Ford Motor Company, it's an established company. If it has extra income, it gives it to the investor for a rate of return for the investor rather than trying to grow the company larger. So typically you will not see the price of a Ford stock, for example, moving from $10 to $20, although the past year has been a little bit abnormal. Tesla, on the other hand, you definitely have to have the price of the stock increase because it's not giving anything to the investor in the form of a dividend. So it takes all of that dividend income, potential income, and gives it back to the company and reinvest into the company to grow the company, which will in turn grow the price of the stock. So that is a growth stock versus a dividend stock like Ford Motor Company. And you can see here the dividend yield is 0 because there is no dividend for this particular company. So those are a couple of the big differences. And then also, The other big difference will be the price to earnings. So price to earnings, simply taking the share price divided by the earnings per share. So for example, on Ford Motor Company, the share price is $20, earnings per share 40 cents or so. 2022, it's $1.90. So you can see that the earnings per share will be around 20 or so for 2022. But if you take a look at Tesla, Tesla is going to be very much higher than that. So here, earnings per share, or excuse me, price to earnings is 28. Again, some of these numbers are lagging for this past year. But if you take a look at Tesla, a growth stock, you can see it's 342. So again, price to earnings 342 versus Ford 28. So this is a growth stock, meaning a lot of the price is kind of built into future earnings. So where Ford Motor Company is an established company, the price to earnings is kind of based off the price and the earnings at that particular point. The price to earnings for Tesla is based off earnings really 4, 5, 6, 7 years in the future, maybe 10 years in the future. So the earnings are lower at this point, but in the future, investors expect a higher earnings, so that price to earnings ratio will be more in line with the Ford Motor Company after it becomes established, if that makes sense. Kind of a different way to take a look at the two different companies. Again, Ford Motor Company here is a dividend stock. It has a good dividend of about, I think the yield will be about 4.1% at this point. Payout ratio in 2022 will be about 20% or so, which is very healthy. Tesla, on the other hand, is a growth stock. There's no dividend. It takes all of its dividends and puts it back into the company rather than giving it to the investor in the form of a dividend payment. And you can see the price to earnings. Investors expect this company to grow, so the price to earnings is really based off earnings in the future. So the current earnings are much less than future earnings, so the price to earnings ratio is much higher than an established company like Ford Motor Company. So just wanted to quickly talk about those two companies. There's a lot of different metrics to take a look at, but please take a look at price to earnings ratio, judging a dividend company versus a growth company, as well as the payout ratio for a dividend stock, establishing whether that's going to be sustainable for the longer term or not. So Ford Motor Company, Tesla Motors, or actually it's just Tesla at this point, it dropped the Motors in the company name a few years ago, are the two largest holdings in the portfolio. I definitely like these companies moving forward. I got into Ford Motor Company as a dividend stock, and I got into Tesla as an options play. Been doing the wheel strategy with Tesla, which I've talked about in prior videos, but I can definitely update that on future videos as well. So again, just quickly wanted to go through the portfolio here at the end of the year. The start of 2022 definitely fell short of my goal of $800,000. And I wanted to respond to a few viewers talking about a dividend stock versus a growth stock with an example of Ford versus Tesla. So with that, I'll kind of end this video. Again, if you guys enjoy the content on the channel, if you guys enjoy the video series, feel free to like, share, and subscribe. Until next video, we'll see you then.